Welcome back to Dadvestor. The market volatility is killing me and everyone else. I mean, it's crazy. My portfolio lost 21% in the past week. Anyway, I'm not really doing much. I'm doing one thing besides holding. So some of the good news is dividends, right? So let's share the good news. And this is why dividends are the king. Still getting paid, right? So even though Coney was a bad investment, and who knows, maybe it'll bounce back. I just don't really believe in it right now. And same thing with YMAX YMAG, but they're not as bad. They haven't lost as much. So Coney's bad. Misty was pretty good. Misty has been pretty solid. But you can see, regardless, I am getting almost $1,000 in March. February was about, or sorry, I might be off. March was like 700, almost 800 or something, and then April, I'm hoping to get a similar amount or more. So, if you zoom in on specific investments, y'all know JEPQ is my favorite, but if you zoom in on this, and I've been buying it a little bit since it dipped, the dividend is growing, and in April, even though the price has gone down, the dividends have gone up, the payments. So it's based not on the share price, but on the actual companies within the ETF. And that is why I will keep piling money into it, even when the market's dropping, actually, especially when the market's dropping. So I bought more of all my top five. This is not what I would necessarily recommend for everyone, but it kind of almost is, right? SHG I would recommend to everyone. And I like JEPQ. It's a little higher risk, but not nearly as bad as Coney. Anyway, so the point of this video is to showcase how am I shorting the market, right? I'm not going to short it through the S&P 500 directly. I'm using the VIX. So this is something I've done videos on a long time ago. I opened this one on the 3rd last week, April 3rd, 2025. And it's still up $22. Today it dropped because of the little bounce up that we had today. But you can see I got it average cost. I bought it for 88, so this is a buy. This is the opposite of what we usually do. We usually look for our average credit, but this is average cost. So I have one contract here, and it's gained value, and so gaining value gives us money. It's pretty long, its dated expiration is in July. So that's sort of my thought. Add days, give us a lot of time, and then we can capture this volatility. I probably should have cashed this one out earlier, but I do think that we're up for more volatility in the next few months. So anyway, I'm going to open hopefully 3+ of these at different dates so that I can start cashing them out as the volatility increases. And then when the volatility pulls back, like it did today, then I open this position. So not as good as the other one, but still, and it's not even profitable anymore. It's negative $2, not a big deal. But the point is, it's relatively cheap, and I can get over $400 out of it if I'm right. I'm not really looking to get that. I'm looking to get 100, 200, whatever, and close it early. And just open a lot of these so that I can be kind of protected against the downside. Because my portfolio is pretty much long the market in general. So these are ways that I could hedge my losses. And I wish I had placed these a lot earlier, maybe at 20 strike point rather than 25 and 30. So yeah, that is what I would recommend. I would recommend you hop into the VIX, get in here. And that can be in a week or two. I'll probably jump into the August. I would want to try to get something in the 20s or lower. So you buy a call here, and then you sell above. And I like to go 5 out. It seems to be a good sweet spot. And then try to capture a point in time when the max loss, which is what you pay to open this position, is under $100. And then for less than $100, you can get, whatever profitability on the market dropping, because this is the volatility of S&P 500, which basically means it's the inverse of it. So whenever the market drops, this goes up, and then we get paid. So that's that. That's a major strategy I'm just going to run forever and capture the lows of the VIX, because the VIX always comes back down. How long it stays there, who knows? When will it drop back down? Who knows? So you just check it every day and then make your plays. All right, peace out.